In this example, we'll be looking at a strategy to use volume nodes and points of control with the EMAs in order to scalp an intraday move using volume profile for futures trading. Here in our chart, we have the overnight session leading into Wednesday, October 5th. In the context of our previous volume profile session on Tuesday, October 4th, where we have our point of control in a thin profile here. We know that areas traded through low volume look to go back to areas of value where high volume was traded. And because we're using our EMA crosses, we see that we have our last EMA cross up at our point of control moving downwards. And so we're waiting for our entry at the next EMA cross and targeting an area of high volume. As the market opens, we sell off, still holding below the EMAs. Until we start to hold a bit of stabilization here with more volume traded. At this point, we see our EMAs starting to curl, and we're going to be looking for our entry. Here we finally crossed the EMAs and got our EMA cross. It's at this point we'll be looking to enter our long position. Using the EMA cross and our volume profile to set our price target. We want to enter with a 2-to-1 risk to reward ratio, and that lets us use not only the EMA cross as a period for entry, but also a support that tells us that our trade idea is invalidated should we break below the EMAs. Our price target, to help visualize better, is the former point of control. I'll make that red just to make it more clear. As we enter on the EMA cross, we'll use those EMAs as our stop loss as well. Enter into our position, looking for that 2-to-1 reward to risk ratio by targeting our old area of volume. Let's see how it plays out. So once we entered on the cross, after stabilizing in an area of high volume, we started to cycle back up, waited for our EMA cross, and entered on the crossing candle. We used those EMAs as well as our stop loss and set our price target at our former point of control, which is an area of high traded volume. Thankfully, the reward to risk of this trade was at 2-to-1, which fits our risk management profile. And this would be a successful trade using high volume nodes and low volume gaps, using the EMA crosses as your point of entry.